Guys, welcome to the next episode of the Deal Finders podcast, where we are here to help you get started or elevate your investing business. And we have a real good friend of mine, Nizan from Boca Raton, and he is going to tell us how he went from one small flip of 40 grand, 55K all in, into where he just closed on a student housing project of $21.5 million. Y'all do not want to miss this. See the steps of growing a business over 15 years and see if it makes sense for you. See where you can fit in. What's your niche, guys? Pay attention, grab a pen and paper. Let's go. Guys, welcome back to the Deal Finders podcast, where we are here to help you get started or scale your real estate investing business by being a deal finder. So we all know that this business doesn't start without good deals. So today we're going to talk to our friend Nizan out of Boca Raton, Florida. I'm curious about what's going on there, but let's just start with you introducing yourself, Nizan. What are you doing? Where are you from? And what should people know about you?
Awesome, man. Thank you, Andrew. Appreciate it. Thank you for having me.
Absolutely.
So now I currently reside in Boca Raton, Florida, sunny South Florida. I'm originally from New York City, and born and raised first generation American. My parents came over from Israel many, many years ago for a better life for their family. And in 1997, I moved back to Israel. And then in 2009, I kind of came back and settled in Florida with my wife and two daughters and started fix and flipping and wholesaling because, in 2009, the world was on fire. You could buy houses for pennies on the dollar. And it was a fantastic time to be in real estate. On the investment side, if you were, buying and whatnot. And slowly, I started flipping and wholesaling things and houses and here and there. And as the years went by and inventory started to dry up and more people came in and were like, you know what, I'm gonna get into this real estate gig, right?
Yes.
Why not? I saw that happening and I said, you know what? I like flipping. I like wholesaling. It's great. For me, it's a lot of work. And I'm very lazy. When you get to know me, I'm a very lazy kind of guy. So I want to do something once and have it feed me over and over again. So I started looking at rental properties. Then I bought a duplex on the south side of Chicago. And then I bought a 4-unit on the wrong side of the tracks in West Palm Beach, where I live. And that kind of just started rolling me into, then I did a 27-unit in Leesburg, Florida. And then the 140 units and 200 and so forth and so on. And today I'm buying large multifamily and student housing properties, purpose-built student housing properties.
I love it. And what a great progression, and in not very many years to get there. As many of our listeners and people at our local meetup, and we're in Columbia, South Carolina, which is home with the Gamecocks, SEC country, a lot of students coming here, and we have seen just massive explosion in that. And so we'll get to that part. Let's start with, you came back in 2009. You started fix and flipping right out the gate. Tell us about your first deal. Really, I want to know how you found the first deal. Can you remember that? And let's walk through that. Sure. Good.
Yeah, absolutely. So, I'd been out of the country for about 15 years at that time, right? Left in 1997, came back in 2009. I grew up in New York City. So all of my contacts, where I worked, everything that I was doing was based in New York.
Okay.
So coming back to the country, I ended up in Boca Raton, Florida. It just kind of happened. And I knew no one. I didn't know the markets. I didn't know people. My network that I built for many years in New York kind of dwindle, right? That's what happens. It's just, if you don't nurture it and keep it going, it disappears. So I remember driving for dollars. I didn't know what it was called back then.
I don't think
we didn't have it. It didn't have a name back then, but that's what I did. I got in my car and every day I would go and I had my mentor who had CDs, and I would put his CDs in the car as I'm driving neighborhoods all the way from Miami up to Jupiter, checking neighborhoods, looking, learning who, what, where, when, right? Just, I needed to know, right? You got to know the lay of the land. And as I'm driving in West Palm Beach, I see a sign, house for sale. I said, okay, let me check it out. I pick up the phone, I call the guy. He meets me out in front of this house. It was a foreclosure house. I think I bought it for, I want to say like $40,000.
Okay. Wow.
And but you ever see those houses where you're afraid to touch them
Oh yeah.
because
I walked one this morning.
right the paint is what's holding it up,
Yeah.
right?
Yeah.
So this house had been painted over and over and over again, and I swear you touch the walls and they felt like they were going to crumble. And I said, "What? I can't believe it." And the guy convinced me to buy it. I bought it. I brought in a handyman. He fixed it up. He painted the inside, painted the outside, and I and then what I did was I what was it, a lease with an option to buy.
Okay.
So I sold it to someone who didn't have good credit, had terrible credit. But he was able to give me $10,000 down payment.
Yeah.
And I had a very low monthly payment. I paid cash for it. So I think I was out of pocket total maybe $55,000.
Okay.
Right. And I had a little bit of money from the house that we sold in Israel, and then we came here and we bought another house. I had a little bit of money left over, and I said, let me use that. So I bought that house. I fixed it up, and I lease optioned it to a gentleman who lived in it for many, many years.
Yeah.
And every month he would pay me. And in the back of my head, I'm going, oh, please, I hope nothing happens to the house. I hope it doesn't fall. I hope it doesn't do this. Oh my God. And just that stress alone kind of ate away at the joy of owning that property. But you know what? One day he came to me and he called me up. He goes, I'm ready to buy the house from you. I said, wow, that's great. You're serious?
Yeah.
Went to the closing table, paid the rest of the money. So and then I made calculations. I made a good profit on that house, because think about it. I was about $55K all in.
Yeah.
And he was paying me $500-600 a month for about 4 years.
Okay.
Right. So that's a good, $5,000 a year in profit, right? Off the interest, right? Off the rent. And then I sold it for $70,000. So I made that extra on top of it. So it actually turned out to be very, very good. And the guy still owns the house today.
Yeah.
Put a nice fence up. The house is still standing. It looks great. So that was one of the first deals I did. And it was by driving the neighborhoods and looking at for sale signs and calling every phone number. I then went to do multiple deals with that same wholesaler where he would find the properties. I would be his private lender. I'd fund the deals. They go in, they do the work. We'd sell it. I get my cut. He'd get his cut. And we did multiple deals like that for a couple of years.
Yeah, I love it, guys. I hope y'all were listening to that. I hope you gained a little bit of encouragement there that you could actually start a decade and a half long business. You've been doing this 15 years now, and now you're doing student housing, right? You didn't start with flipping student housing, right? You started with that one deal in your neighborhood along your route where you were driving, looking, learning. You just called the number. And now people will say, well, that was 2009. Things were different. Yeah, but they're not that different. There's still for sale by owners signs out. There are still foreclosures out, and there's still wholesalers out there, the people that are finding deals for you that you can make the connections and build a network. And ultimately, it's that first one that you get it, you find it, you work through all that. Like you kind of glossed over it. It wasn't an easy thing. I know it's not easy to flip a deal, the first one, but when you get through that, now you have proof. Now you can see, now you know what you're looking for. And then you build your business based on what you want to do, right? And so,
That's right.
Nizan, that's fabulous and fantastic. And one of the things that we found through the Deal Finders podcast is that the first 1, 2, 3 deals from just about everybody, I think there might be one person, but just about everybody, they found them right in their own backyard. So you're driving, up and down the coast, you're driving somewhere in your community, and you called the sign, right? Y'all do that today. If you don't have your first, or if you're trying to get that second or third, get out in your own backyard. You can do it in your car, walking the neighborhood, picking up the phone, calling people in your network. That's where your first couple of deals start, and then you could grow from there. So that's how you're going to get started. But Nissan, let's talk about where you're going. So that was a long time ago, and I don't want to fly through the progression, but what were the steps? Like, how did your business grow incrementally through the years?
That's a great question. Great question, Andrew.
Yeah.
So, I was doing the single family fix and flips, and I met this wholesaler, and I met other people, and I started working with this realtor who understood the investor head, which is important, right? You want to work with people that understand what you're doing and assist you, not hinder you, right? Because there's so many realtors out there that are great at retail,
Yep.
but not at wholesaling.
That's right.
Not at fix and flipping. They don't understand the investor mind. They're not willing to go out there and fight for you. So I kind of fell on these people, right?
Yeah.
Just by being there, talking to so many people and researching and whatnot. And so I started flipping houses, and I'd flip a few and hold one and put a renter in it and so forth and so on. And I saw how great it was to generate that passive income.
Yeah.
Right. On a single family home, it's wonderful when your tenant pays you. What I found that was hard was when they didn't pay.
Yeah.
Right? They didn't pay. Now I'm like, wait a minute. I got to come out of pocket to pay them, to pay my lender, to pay for the expenses. That doesn't sound good.
Yep.
So I and I think before the show, or when I said I'm a very lazy guy. So
Yeah.
I really wanted to do something that I could do it once and it would feed me over and over again, right? So I started looking at rentals, duplexes, quads, things of that nature. So again, the same wholesaler that I was working with that gave me that house, and we did more houses. We bought another house for $16,000. It was a concrete brick house. I wish I would have kept that today. That house is worth $500,000 today. Right? But hindsight, right?
Yeah, well, you got to get
It got me,
get here.
exactly. It got me to where I am today. So I don't look back in a negative way. I say, I had to do that to get where I am today. So I bought a fourplex from him out of foreclosure. He found it. It was a foreclosed property. And I started working with that. And again, wrong side of the tracks. Whatever my mentor told me not to do, that's what I did. I kind of do things
Not
backwards.
a good student.
Right. Not a good student. So, my fourplex had a drug dealer with all his guys.
Yeah.
Right. And I say guys because there weren't any girls. It was all a bunch of, guys hanging out in front of the unit. Then there was a lady of the evening on the other unit. It was her boss in the other unit, and then a single mom with her daughter in the last unit. Now, when they paid rent, it cash flowed beautifully because I bought it at a real deep discount.
Yeah.
But, a lot of turnover because I had this one group of gentlemen on the end unit that kept driving all the other tenants away.
Yeah.
So I had to, it was a lot of turnover. I finally sold that one to someone else. After I got that group of gentlemen out of the unit, and I had to be very, very creative in a way to get them out so that they wouldn't come after me, right? Because you never know who you're dealing with, right?
Yeah.
So then I sold that one, and then I bought a duplex on the south side of Chicago. I'm in Boca. What the hell am I doing at the south side of Chicago? I have no idea, right? But again, my mentor said, "Don't do that." I said, I'm going to go do that.
Yeah.
Thank God I was able to, with all the headache, I was able to sell that as well, recoup my money, and then move on. And while I was transitioning from single family into the multifamily world, I was telling everyone what I was doing, right? All of my contacts, all of my hard money lenders, all of my private lenders, all of my network, everyone that I knew, I said, hey, Andrew, listen, I'm getting into multifamily. Do me a favor. If you ever hear of anybody selling a multifamily, or if you know anybody that wants to buy or that wants to invest or is tired of the stock market or anything, do me a favor. Please turn them on to me because I'm looking to build my network of investors and I'm looking to buy some multifamily properties. It could be a duplex, 3 units, 4 units, 10 units, whatever it is.
Right.
So one day I'm talking to one of my hard money lenders. He's out of Boston. And he's like, hey, man, listen, I got this client. He's got 27 units up in Leesburg, Florida. I've never heard of Leesburg, Florida. I'm like, where is that? He goes, it's an hour north of Orlando. I go, what's there? He goes, nothing. All right. I don't know if it's so interesting. Okay. He goes, it's around a 20 cap.
Wow.
I'm like, it sounds fishy, right? Too good to be true, that whole thing, right? I hung up the phone and I'm thinking, about a week goes by and I'm in my head. And I'm thinking, and I'm doing the math, and they were asking $500,000, and they wanted a 20 cap NOI, 20 cap, and what was the NOI? I'm like, dude, that sounds crazy. I called them back up.
Yeah.
Long story short, put the property under contract because there was a widow who owned the property. There's always got to be a story behind it, right? Why are they selling? What's the story behind it? Because when you have the story, you have the seller's motivation. It could be for single family or multifamily, right? Now you've got their motivation. Once you have their motivation, you can create that offer that eases their pain, right? It may not be what they want, but hey, you know what? It's an offer.
That's right.
Right? So, we went, I put the property under contract. We did all of our due diligence, my partner and I. And on the day that our deposit became non-refundable, it became hard. We realized that the subsidy from the USDA, United States Department of Agriculture, has housing subsidies, just like Section 8. Who knew?
Yeah, how about that?
Who knew? Right? We found out that the day we take over, the day we take ownership of the property, there was no more subsidy. So the property's worth zero, would have zero income. So, we lawyers and all this kind of stuff. So they gave us an extension until we were able to get all of the residents Section 8 vouchers. Right. So we went and we did Section 8. And our goal was to make sure that none of the residents lose their homes, because these were Vietnam veterans. These were sick elderly people. They had nowhere to go. This was their home. And we didn't want to take over a property and evict all these people because they weren't, the property was zero. So we worked with Section 8. We worked with the sellers to give us an extension. We got everybody their money, their vouchers, and they all stayed. And at that point, my partner and I, we decided to flip it. So I had negotiated the price from $500 down to $400.
Wow.
Even better, right?
Even better.
And then I found another investor, and we flipped it to them for $480,000.
Wow.
So in 3 months worth of work, we made $70,000 net on that deal.
Yeah.
And that was we were like, wow, that was fantastic. Okay, let's do it again.
Yeah.
And what we did was we found someone, a sponsor, someone who was able to buy a large multifamily property, someone that we knew who was very successful in the larger multifamilies. And he had a property in New Braunfels, Texas. It's right outside of Dallas, under contract. And we partnered with them to help manage the asset and whatnot. And we invested our own capital. We just made 70 grand. So we said, let's take 50 and invest it, see what it's like to be an investor in one of these deals, right? A limited partner. So we went, and then we were talking to some other people, and they said, hey, how can we invest as well? We said, oh, we'll talk to them, see how it goes. We raised about $150,000 as well for that project. And what that did for us was it put us on the map. Yeah, part of the management team, right? Investor relations, all of that kind of stuff. But it showed the world that Nizan and Laura were now on the market. We're now in the game, on the board, on the scoreboard, and this is what we did, and this is the team that we had. So now we had 140 unit Class A property that we partnered with. The financial benefit from doing that particular property was very little. We weren't looking to make money on that deal. What we wanted was credibility, track record. We wanted to show people that we were able to do these types of projects. Then from there, another gentleman that I knew who lived in Hawaii, he said, hey, listen, I've been working with this broker in Texas. I have a 220 unit property under contract. We said, hey, let's do it. Yeah. We went in, we sponsored that. We became the key principals, guarantors, signing on a loan and all that. We bought it for $7.5 million. And then we put $500,000 into it in renovations. Yeah. About 2 years later, we sold it for $10.5 million. Our investors were like, wow. Yeah. And that kind of started snowballing us. Then from there, we did another 170 units, 240, so forth and so on, doing a lot of C-class properties and B-class properties that had a lot of value-added component back then. Right. And back then, C-class properties were trading at a higher cap rate, right? 7, 8 cap rates. Today, they're trading at 5, 6 caps because cap rates are compressed. So we went where the C's and B's were. Today, in the last couple of years, I've transitioned from the C's and B's up into the A class because they're trading at almost the same value as the C properties. So last December, and also we're transitioning into student housing. So last 18 months, we've bought, I would say, around between 50 to 60 million dollars worth of student housing projects, Class A student housing.
Wow.
And the reason why we shifted in student housing is economics 101,
Yeah.
supply and demand.
Yeah.
So demand is growing in tier one universities. It's exploding. Freshman classes are growing. And there's not enough purpose-built student housing to house all of these new freshmen that are coming in, or even the sophomores. So, there's a huge need. We come in, we're supplying, we're fixing that need. And it's been an incredible journey. So in December of 2023, we closed on our last property, $21.5 million. It was a 1-year-old property.
Wow.
We bought it at a 5.5 cap rate. I sold a Section 8 property about 2 months ago at a 5 cap.
Yeah.
And this is a 1980s product. And I just bought a 2023 product for a 5.5 cap rate. A little bit on the cap scale, a little bit less expensive than the C-class property.
Yeah. So
and we've been beating our pro formas, and it's just been an incredible journey.
So that is exactly incredible journey from, first flip to $21.5 million. And guys, as you're listening to this and you're like trying to rack your head around it, you don't have to do this to be successful in real estate. You can stick and do single family and continue to build that business, or duplexes or triplexes, or if you set your sights on student housing and massive multifamily, then he's just kind of giving you that game plan, that path for it. We got to identify and define a few terms for people
Sure.
before we jump in. So let's start with NOI, net operating income. What's the easy math to get to that?
Sure. NOI is your effective gross income, which is the income. So you take all of the income, right? If your let's say you have a 4-unit property and each unit is $1,000.
Yep.
So your gross potential at 100% occupancy is $4,000, right? Then you want to subtract from that, some bad debt, or if you're going to give any concessions and vacancy and whatnot. And then you get your effective gross income.
Yep.
Then that you subtract all your operating expenses, except for your mortgage. Your mortgage is not an operating expense, right? Because you can buy a property, we can buy the same property, I could have a mortgage on it, you could buy cash for it.
Yep.
Right? So that's not an operating expense. So you take your effective gross income, subtract all of your operating expenses, and that's your real estate taxes, insurance, your vendors, repairs and maintenance,
right,
marketing, legal, eviction, any cost that there is to operate your business.
Yep.
You subtract that and you get your net operating income, your NOI.
Yes. And then we could take that, and then you said it a lot, cap rate. And we talk about, you said you started with that first property, it started at a 20 cap and ended up, sounds like a 25 cap. But that is so foreign to people that have no idea what we're talking about, because single family investors don't really talk cap rate. It's not how we value properties. It's not
Right.
typically how we buy, renovate, or whatever. Cap rate comes into play when you're talking multifamily. We look at cap rate if it's above 10 units, and that's just kind of a arbitrary number. When it starts to become higher income, higher operating expenses to run it, single family rental, not a huge operating cost, so you don't really value it that way. Just kind of talk cash flow. So what's the cap rate? And right now, you kind of gave us a hint. 5.5 is pretty good. And it's hard to digest. Like, I'm like, oh my gosh, how in the world does this work? But you're still finding good deals with that. So how do you get to cap rate, and what does that actually mean?
Sure. So just like you said, right? So houses, we value them based on the comparables, right? Based on the houses that's sold in the neighborhood, right? You're comparing apples to apples. In multifamily or in commercial properties and bigger commercial properties, you don't really go, you don't look at your apartment complex and then go across the street and go, well, what did that sell for, right?
Yeah.
It doesn't usually work that way. So the value of the property of a multifamily is based on the net operating income. Mm-hmm. So you have the NOI versus the purchase price.
Yep.
Right. And the cap rate is called the capitalization rate, and it's a measure that we use to evaluate the viability of the various investments, right? So, for example, as As the cap rate goes up, the value of the property is less expensive. Okay. Right. So let's say you have a 10 cap. So you know that your income based on the purchase price is going to be really, really high. So if you have, let's say, $1 million property and it's a 10 cap, your net operating income is $100,000.
Yep.
Right? That means that you're going to have a lot of cash flow on that property because the cap rate is high. It's 10%.
Yeah.
Whereas the value, let's say now you have that $100,000 net operating income, but now the property is $2 million. Mm-hmm. Your cap rate just went down to 5.
Yeah.
So now that's a ratio between your income and what you're paying for the property. So the way we evaluate it is, we talk to brokers. What is the market cap rate for this type of asset? What is the market cap rate for a 1985 construction?
Yeah.
In this neighborhood. Oh, the market cap rate today, it's 7%. So when you're talking to a broker and you get a property in that market, to do a real quick analysis, you can look at the net operating income, you can look at the purchase price, you get the cap rate, you're like, oh, that's a 5 cap rate, but this is a 7% cap rate market. Yeah. So maybe this property is a little too expensive. Right? Okay, so maybe not. Maybe let's dig deeper into it and see why it's expensive. Maybe there's got a lot of upside in it as well. So maybe we can do something to it. So a cap rate, it's not the end all be all metric, right? But it is something to look at when you're acquiring or selling a property. And it's to just evaluate how much cash flow you're going to generate from that property.
Love it. I love it. So very technical there, some inside baseball, if you will. And you mentioned earlier about your having the mentor kind of in the back of your head, helping you, guiding you, and then you going astray. I see this multifamily space, all the stuff you just went through, as quite difficult if you go at it alone.
Yep.
Am I hearing that right? I mean, is this kind of the space that you need brokers, you need agents, you need credibility, sponsors? This is a tough business to go at as like a one-on-one, right? So what does that look like today? Do people get mentors? What do you think?
Oh, that's a great question, Andrew. One of my partners, she's got a great saying. She goes, to be successful in large commercial multifamily projects, it's like running 12 marathons at the same time, and you gotta cross the finish line on all 12 marathons at the same time to be successful.
Yeah.
So, I joke and I say, it's difficult for me to get up and run to the end of the room. You want me to run 12 marathons now by myself? It's impossible. So doing larger multifamily deals, you need to have a team. And it's best to have someone on your team who's a mentor who can say, you know what, don't do that. Or you missed this, you missed that. Look at this. Well, did you check on this? And a good mentor will also open up doors for you for networking, because you're buying a $5 million property or even a $2 million property, right?
Yeah.
One of the things that when I was growing up in New York City, right, I'm walking down the streets and I'm looking at all these huge buildings, these skyscrapers. And I'm going, who in God's green earth has so much money that they can build or buy one of these things by themselves? And then I learned about syndication, where you can go and you can grab a group of investors and pool their money together. And now you've got more buying power, and you can now go out and buy one of these towers. But how do I find these people? Where do they live? What do I say? What's that magic phrase that I can tell them that they'll give me $1 million? I didn't know any of this. So a good mentor will open doors for you to network in the right places. We'll teach you how to network. We'll share with you their team until you build your team, because you need an SEC attorney, you need a real estate attorney, you need property management. It sounds a lot, like a lot. But when you have a mentor, and get a mentor who's doing it, who's still in the business today. Don't get someone who bought, the last property 25 years ago and is teaching you how to do it.
Yeah.
Right. It's a different ballgame today. All right, so find someone who's in the trenches today, who's doing it, and they can open up all these doors for you and make life a lot easier. Right? It's all about flattening that learning curve, flattening that success curve. So get a mentor, right? A few years ago, I created my mentorship program because I knew where I was back then, right? And I wish I had someone who could take me by the hand
Yeah.
and tell me, do this, okay, step 1, do this, step 2, do this, step 3, step 4, step 5, and here's a team that can help you with it. So, if I had that, I would be twice as far along as where I am today.
Yeah.
So I created my mentorship program to help people get into, you don't have to get into a 100-unit project. There are many people out there that want to get into a duplex.
Yep.
They want to live in one side and they want to rent out the other so that rent could pay for their mortgage. So they can live rent-free, mortgage-free, and not have any headaches. Some people want to buy a 4-unit property so that it could pay for their bills so that they don't have to worry about the stress of, oh, it's the end of the month. How am I going to make my bills, right?
Yeah.
There are people that love what they do, right? There are doctors that love their patients. They don't want to give up their practice, but they understand the effect of rental income coming in, whether you're waking up in the morning or not, right? And then there are people like me that go, dude, I want that $20 million property. How do I get there? How fast? How quickly? How do I build a team? So I take people step by step from all their different journeys, and I walk down that path with them. So it's crucial, and even in wholesaling and flipping and whatnot, I wish I had a mentor that could really sit there and show me, this is what a good property looks like. This is how to negotiate. I had nobody to teach me how to negotiate. I wish I would have saved so much more money. I would have been able to acquire more properties if I had better negotiating techniques and tactics and skill sets. So I bring all that to my mentorship program where I help people, and it's you can do it alone because we have the internet today, and you can go to YouTube University and you can learn how to analyze and underwrite and whatnot. But it's that accountability. It's being able to pick up the phone and go, hey, Andrew, I was talking to the seller yesterday and this is what they said, and I drew a blank. What would you recommend the next time that happens? How would I respond to that, right? And being someone who's been in the industry, you're like, okay, this is how we handle this next time.
Yep. You got it. Man, I love that. I love that. And such encouragement because there's so many stages that you've gone through, just your business, but we all have these stages. We all are growing and changing based on our needs, what we want for our family or, ourselves or our community. And in real estate, we have so many different options and so many different paths. But like you mentioned, there's someone that's been there before, right? And so there's no reason for us to reinvent the wheel every time. Shorten that learning curve, kind of get to success faster by following someone else's footsteps, no matter what that looks like, whether it's YouTube or, a mentorship coaching program, we do deal partnerships here locally. Like there are ways that you can get in and move faster to your end goal, which for you was, you're not done. I know you're not done, but 21 million, and so that's what we look for. That's what we try to encourage people to do is say, you know what, don't go at this alone. No matter what level you are, you still need a team to do a single family flip. They still need a team. It's basically the same structure. It's just when you go to a 100-unit, you need more of them and more professional team. So love that.
Right.
Everything you just went through is just gold. I hope y'all kind of picked that up. I hope you took some notes. We're going to have to stop this podcast because otherwise we'll be here all day. Nizan, and again, there's stuff I wanted to know more about Florida and what's going on there, but we might have to do a round 2. And so we could dive into that and some more of this multifamily. But right now, how can people get a hold of you if they want to? Do you have a website or something that they can find you?
Yeah, absolutely. Thank you. So you can go to www.multifamilyinc.com. That's multifamilyinc.com. And if you want to hire me, if you want to get to work with me no more, just put a / and then application after that. Go in there, fill out the application. I read every word of every application, and then I'll reach out and we'll discuss mentorship, if it's right for you, if I'm the right fit for you, because, I want to work with people that want to achieve goals, right? And I don't have a lot of time, just like you, Andrew, right? We're busy with our own businesses, right? Doing deals, raising capital, doing all that kind of stuff. So there's a handful of people that I want to work with. So multifamilyinc.com/application.
Awesome. So you guys, we'll put a link to that below so that you can find it easily. Click on it. And I forgot to tell you, if you're listening to this, you can watch us also on YouTube at the Deal Finders YouTube channel. And of course, if you are listening, make sure you like, subscribe, share, all those things so that people that are in similar situation can find this and hopefully find some value in these podcasts. So go to dealfindersclub.com if you want to see any more of our information. We have lots of free training and contact info, and we do events literally every week. So if you are in South Carolina, you can actually show up and come to those. But guys, I hope this has been helpful. I hope this is going to get you going, either getting started or moving up that ladder, getting to a little bit bigger, and finding your spot and figure out what needs to be for your business. So guys, until next time, this has been the Deal Finders podcast. And until then, you guys go out there and find your next deal. See ya.
Thanks for listening to the REI Deal Finders podcast. You can find out more and apply to be a part of the REI Deal Finder community at reidealfinders.club.